quiet day on Dalal Street after a near 700-point rally for the Nifty over the last three sessions. Bank Nifty does better with a near 1% gain. Broader markets trade flat today, advance decline ratio at 1:1.
HDFC Bank was conscious in not accepting high-cost deposits, which have resulted in slower growth in Q3. This, according to Shashidhar Jagdishan, the MD and CEO of HDFC Bank. During a meeting with analysts, he said that the bank's deposit growth will not match loan growth overnight, but will rather follow a glide path.
Kotak Mahindra Bank undertakes a major top management reject, mainly elevating KVS Manian as the joint MD and Shanti Ekabram as the DMD, subject to RBI approval. Kotak Bank stock trades slightly higher today.
Finance Minister Nirmala Sitharaman will meet with heads of fintech firms next week. CNBC-TV18 learns from sources that the meeting has been called to reassure the industry that the sector remains a key priority for the government and allay any concerns in the view of the RBI action against Paytm Payments Bank.
Hello and welcome. You tuned into Business Lunch. I'm Nisha Podar. With me, as always, is Pavitra Parekh. So, Pavitra, it looks like after a record smashing day yesterday, Nifty 50 is totally taking rest today.
Yeah.
And in market has been slightly quiet, but there are pockets that are showing exuberance. Say, for example, Bank Nifty and some of the big components of Bank Nifty like HDFC Bank, Axis Bank, Kotak Bank, all of them are doing well in trade. And the heavyweights are really having a huge impact on the Bank Nifty, almost close to 1% gain. When we talk about Nifty 22,151, we may say it's a quiet day of trade, but these are the levels which were conquered just yesterday as the record levels for Nifty 50, but still going tepid. But the momentum really continues on the upward movement, at least through the trading session. On my screen at the moment, PSU Power Grid is the top gainer today with over 4% gains, and some of the banks along with other PSUs like even NTPC, SBI Life, some of the others are really doing well today. On the flip side, let's take a look at the ones which are on the contra move. Remember, autos were doing well. And now it's the flip side, some profit booking seen in the auto sector today.
Oh, absolutely. And, like you mentioned, it's the Nifty Bank led by HDFC Bank, which is really pulling its weight today. You haven't seen that for a while. So, it's good to see a 2% pop on HDFC Bank. By the way, for the broader markets is where, it's a little bit slower today. So, the mid and small cap index still in the red. Advanced decline is absolutely neck and neck. But like Nisha said, we're just stopping for breath right now. It's nothing alarming at all. What, has seen a little bit of profit booking, like Nisha was mentioning, is the auto pack. But some of those names are well off the day's low. So names like Maruti, like, M&M, still very muted, but over 1.5% from the lows of the day. So that's good to see. These are some of the other auto names which are seeing some red today. You also have the IT pack, which is coming in for some pressure today. So names like HCL Tech, Infosys, that's where a little bit of the selling pressure is really concentrated. So that's what's happening across the market. We'll talk more about this. But let's kickstart the show now and by talking about Kotak Mahindra Bank, because like we told you, this entire banking pack, right, with HDFC Bank, Kotak Mahindra Bank, Axis, it's all been leading the gains. And Kotak Mahindra Bank is in focus after having announced a slew of changes at its top management. Devang Ghiwala has been appointed as the bank's new chief financial officer. This is from, with effect from the 1st of April. There are a lot of other changes as well. So let's bring Ritu in. Ritu, take us through all of the changes that have been announced.
Well, this is the first big management rejig that we're seeing at Kotak Mahindra Bank since Uday Kotak stepped down as the CEO and Ashok Vaswani took over. The bank has made 5 key changes in its top brass, and the key among them is redesignating KVS Manian as a joint managing director of the bank with effect from the 1st of March. Now, Manian is currently a whole-time director and leads the corporate banking business, and he was seen earlier as one of the potential successors to Uday Kotak. But this redesignation assumes even more significance amid reports that KVS Manian was potentially in the running for the Federal Bank CEO position. So will this elevation change things? We'll have to see. Remember, Deepak Gupta was the last joint MD until he retired as the interim CEO in December last year. The second key redesignation is that of Shanti Ikambaram, also currently a whole-time director and also believed to be one of the people who were in the running to succeed Uday Kotak. She has now been redesignated as a deputy managing director. This is also an interesting move because it is perhaps the first time that Kotak Bank has created this position of a DMD. In other key changes, Devang Ghiwala will take over as the president and group CFO with effect from the 1st of April when the current group CFO, Jaimin Bhatt, retires. The bank has also named Milind Nagnur, currently the Chief Technology Officer, as the Chief Operating Officer, and Paul Parambi, who's currently the Chief Risk Officer, as the Group Chief Risk Officer. So important changes all around at the senior management of the bank, and like we said, the first one under Ashok Vaswani's leadership.
All right. Thanks so much, Ritu, for getting us all those important details on the top brass changes that are being made in Kotak Mahindra Bank. And also in related impact, remember, shares of Federal Bank slump after Kotak Mahindra Bank redesignates KVS Manian as the joint MD. Now, remember, he was a potential MD as well as CEO candidate for Federal Bank. So it's Kotak Mahindra's gains and Federal Bank lost on account of that news development. And it's a bank-heavy day, it seems, today, because we are now going to talk about HDFC Bank, which is up 2%. That big heavyweight is adding a lot of momentum to the market. Now, HDFC Bank aims to maintain the financial stability and also continues its trajectory of profitable growth, says the MD and CEO Shashidhar Jagdishan. Now, he is speaking at HDFC Bank Group event. He adds that the merger preponed the loan growth of the combined entity and triggering the need to really raise funds. Listen in.
Ever since we announced the merger, we realized that with the merger will come a preponement of loans in our balance sheet, which is pretty much reflected in the constitution of the share. I mean, we now have around 14 to 15% share of loans on the stock of our balance sheet as against to 10 to 11% of deposits. We realize that effectively we have preponed the loan growth, so I need to now have that period of, I would say, what do you call it, transition time to warm up the engine to raise that amount of equivalent granular, sustainable funding to be able to substitute some of the bond maturities so that I can have a reasonable amount of share moving up. We have been operating our loan deposit ratio in a reasonably healthy range of around 85 to 90% or 80 to 90% depending on which year it is, and it's a long-term average. Obviously, we have grown, which means that the growth rate in our deposits and loans have been rather on very similar pace of growth. Going forward, whatever we do will be very similar to what we have done in the past, which means that we'll maintain a very healthy incremental LDRs. As I said, it's a balance of how much I want to deploy and how much I want to repay, and that itself, since these are all high costs, it sort of gives you a kind of a massive fillip to your profitability.
All right, that is the word coming in from HDFC Bank. But with that, let's move on to an important story now. Sources say that the Finance Ministry may hold meetings with fintech startups next week. This move comes in after recent actions taken against Paytm Payments Bank by RBI. So Parikshit is here with more details on this. Parikshit, I guess just trying to allay any concerns that the industry might have.
Well, yes, the action that RBI had taken against Paytm Payments Bank that had raised some concerns in the startup ecosystem, especially the fintech players. We now believe that the finance minister would be meeting fintech startups, the heads of these startups, sometime next week. And the message would be that all regulations must be followed and compliances must be done. If compliances are done, if all startups are following regulations, then there's nothing to be worried about. At the same time, the government would like to send out a message that it backs the startup ecosystem. It wants the fintech startups to grow, and anyone who is complying with the law will be backed by the government.
All right. Thanks so much, Parikshit, for getting us all those important details. Yes, the fintech world is definitely rattled, but there's also competition in that particular space. So let's see what really pans out in that important meeting. All right, with that, we'll slip into a short breather on Business Lunch. But when we return, we'll get you excerpts from the exclusive conversation we had with the executive chairman of TVS Supply Chain Solutions, and also on the rising tensions in the Red Sea, which is impacting the supply chain. Stay tuned.
Welcome back. You're still tuned into Business Lunch. Let's now bring you the latest updates from the escalating tensions in West Asia. The negotiations for ceasefire and hostage release remain at an impasse as Israel rejects the proposals and calls Hamas's demands delusional. Even after US and European Union calls for a temporary ceasefire on the Gaza Strip, Israel's cabinet minister Benny Gantz warns that they will launch an attack on Rafah even during Ramadan if the hostages are not released by the 10th of March. Meanwhile, tensions in the Red Sea also continue to mount. A Belize-flagged ship has been damaged after being hit by missiles fired by Houthi rebels, forcing the crew to abandon the cargo vessel. Houthis have also claimed that the cargo ship is at risk of sinking after this latest attack.
And even as Red Sea crisis really continues impacting the supply lines across the world, multiple reports have pointed to escalating freight and insurance costs. While cargo lead times have really extended to beyond 2 weeks now. In an exclusive chat, TVS Supply Chain Solutions Executive Chairman R. Dinesh told Jude Sanith, our colleague, that high freight rates were here to stay. And he also added that while TVS exposure to crisis is small, the company would continue alternative routes until it ends. Here's a slice of that important conversation. Listen in.
For us, I think, as I said, the global freight business is a small percentage of our business, 30% of our business. But if you look at it, and that will continue to have uncertainty, and I don't think none of us have an immediate answer to say this is exactly how it will evolve. So while we continue to watch that space, I think the focus is on making sure that our other businesses take care of any risk which we may have in this segment, which we are fairly confident of.
Right. But moving otherwise from an industry perspective, and even though I know for a fact that accounts for a very small part of your business, just the fact that you're seeing costs go up, freight costs go up, one report says by 700%, insurance costs are up, lead times are up as well. What do you think the strategies ought to be in dealing with this crisis that many say affects a large part of the kind of supply chain business or trade that happens across the world, especially in these parts?
See, it is unfortunate, but if you remember, I think the problem is going to be that these are all things which are not in our control. So we will find solutions for our customers as the case may be. And I think that's part of how we tend to work very closely with our customers. And we believe that already there are other alternate solutions which have been found. Yes, costs will go up for a period of time, and that's something which we will have to face and bear, is how we look at it.
Do you have an outlook on how many quarters we can expect costs and these overheads to keep going up by?
But that is very difficult to really forecast as we speak, because as you saw, people find alternate solutions very quickly. So I would say we should wait and watch that space.
All right, that is the word coming in from TVS Supply Chain Solutions. We are going to get into a short break, but on the other side, we have another very interesting conversation lined up for you. We will bring you excerpts from our exclusive conversation with Amol's MD Jayan Mehta. Stay tuned.
Welcome back. You're watching Business Lunch. A quick look at the market at this point. And yes, market has gone a slightly more tepid in the last 15 minutes of trade. So Nifty 50 absolutely on flat line, and Bank Nifty is just about 0.9% gains. So it has slowed down in terms of the growth from there, but still holding on well. But remember that HDFC Bank with 2% gain is one of the biggest contributors in the market, but that is being offset by another big boy, Reliance Industries, which is a drag and closer to the low point of the trading session on big boy Reliance Industries. So that's a big drag coming in. And apart from that, IT has not performed well. So TCS big boy has lost some more ground in the last 15 minutes of trade. And along with that, some of the PSU companies have also got shaved off, and that has added slight bit of pressure in the last 15 minutes of trade. But it's all in all a quiet day when it comes to the frontline indices. Let's take you to the on CNBC-TV18 exclusive now. And this is an interesting conversation. Well, Amul's MD Jayant Mehta has announced a 5-time capacity expansion in the potato snacks segment of the company. Now, speaking to CNBC-TV18, he said that Amul is doubling its ice cream capacity. He also ruled out the likelihood of Amul's stock market listing, adding that people can instead be a part of the Amul journey by consuming more Amul products. Listen in.
We are market leaders in every single category of dairy products that we operate, and we are very, very ruthless in protecting our turf and expanding the market share. So we're not worried about competition. We welcome competition. All we need is a level playing field, and that's about it.
All right, a level playing field. But you know, Amul revenue-wise is India's largest food company. Do you ever get tempted to list?
It's contradictory to our objective. All the people sitting here look at the ticker, and the ticker price is decided on the profits, and profits is contradictory to our objective. For a simple reason, a private company can show profit by buying the raw material at the lowest price, sell the finished good at the highest price, and the maximum profit is for the owners, investors, or the shareholders. Okay. In our case, we do exactly the opposite. We buy the milk at the highest price because we are buying it from our owners. And obviously, consumers get Amul at the most affordable value for money price because we know we have a mandate to grow the market. So we work with very low cost, very low margins, very low overheads. And that's how we keep both sides of the spectrum happy. But tomorrow, if one fine day Amul thinks it has to get listed, what will it has only two options. Either reduce the procurement price, which means all the 36 lakh farmers will be angry. If you increase the consumer prices, then you lose market share. And obviously, consumers will be unhappy. So we don't want to do that.
So listing is not on the
cards. No, it is just not an option. People can be a part of the Amul journey by consuming more and more Amul products.
I have to say, this is the biggest standout for the company who's not looking at profits.
Or the other option is you can buy cows and become our owners.
All right, you know, you touched upon this, but you know, what are the new categories that you're currently seeding? You mentioned mithai, but if you could elaborate more on the new offerings.
So anything which the farmer produces, Amul is the brand, it's a bridge from the producer to the consumer. So we got into potato snacks. So we set up a plan 2 years back. We're expanding the capacity 5 times. We're getting into honey. We're getting into organics. We're getting into mithai. We're getting into premium ice creams, doubling up our ice cream capacities. Cheese capacity is also increasing by 50% in next 1 year.
All right, that is a very refreshing voice, Amul's MD telling us that if you want to be part of the Amul story, well, you can buy more Amul products. They are not looking at listing at all right now. But with that, we're going to wind down on this edition of Business Lunch. Thanks a lot for tuning in. We have Mid Cap Radar on the other side.